Welcome, I'm Scott Drake. My guest is the tax lawyer, Robert Wood at Wood LLP in San Francisco, writing in Forbes about giving the IRS your Quickbooks, which I mean, in some cases might seem like a good idea for a business, but you're recommending some caution here, aren't you, Rob?
Yeah, well, I am, and the IRS is, understandably, I guess, like everyone else, doing more and more things electronically. They're doing, needing electronic records in many cases. But I think it is a place where you need to be cautious because you want to make sure you know what it is you're handing over.
So there's nothing new, as you say, about the IRS wanting electronic data, and normally this is reserved mostly for big businesses, and they're beginning to look at smaller businesses and companies as needing to do this as well.
Yeah, that's right, and I think big businesses are really in a different category. They tend to have customized software. They tend to have lots of people who are good, and sort of IT people and accounting people in-house at their companies that can sort of go through and mine the electronic records for specifically what the IRS needs. But a small business is in a different category, and the reason we mentioned Quickbooks, a small business is much more likely to buy off-the-shelf software like Quickbooks and dump all sorts of things into it. Small business is also less likely to have somebody who's really good at either customizing the software or restricting its use and providing pieces of it. And so once again, I think the danger is with the small business wanting to be cooperative, wanting to hand things to the IRS when requested, but also trying to protect itself.
What would be then your advice then to small businesses? What kind of steps could they take to protect themselves?
Well, I think number one, make sure that you're thoughtful about responding to IRS requests and get some professional help. Most likely, the business has either a lawyer or an accountant. The IRS process typically starts with IDRs, information document requests. I mean, these are much short of a subpoena or a summons or something. These are not legal process. They're sort of like a memo where the IRS says, please give me all these things. And frequently you can satisfy the IRS by responding and saying, look, here is, we don't have item 3, and I'm being advised that I can't give you item 3 because it's electronic and has lots of things embedded in it, but here's all the rest of the information that I think has the same data anyway. I mean, that's the kind of thing I would try, and most likely the IRS would be satisfied with that.
Would it be something that would happen outside of an audit? Would a business want to give them some electronic data to kind of get themselves in good standing and then probably look at reducing that over time?
No, I don't think so. I think this is strictly an audit function.
Okay.
That is where you're responding where the IRS is asking for things, and I think all of us have, maybe appropriately, a little bit of a knee-jerk reaction to give the IRS whatever it wants. I think most lawyers, certainly most tax lawyers, would tell you to sort of take that with a grain of salt, or to be a little more cautious. Just don't willy-nilly hand things over. Think about it, because you do have an obligation to cooperate when they ask for receipts proving charitable contributions or something. You need to provide it, but you don't need to give them, electronic access to your entire business.
Are you saying that just because the IRS asks for something, you don't have to give it?
I am saying that.
Well, that's good advice. I appreciate that. Rob Wood is the tax lawyer at Forbes.com. He's also principal at Wood LLP in San Francisco. As always, a great pleasure, Rob. Thank you.
Thank you.
And thanks for watching.